Every stock scanner you create should be created with purpose. The effectiveness of a scanner is gauged by the quality of the results, not the quantity. You don't want to create a scanner that simply returns hundreds of results of stocks you can look at. Instead, you want to create a scanner that shows you the best trading opportunities for your specific style. One of the best ways to do this is by reverse engineering the process, meaning you'll start with a setup you're looking for and try to create scan parameters that will help you find more setups like the one you like. These setups will vary by trader, so it's important to find some setups that you've traded well so you can find other setups that might provide similar opportunities. To get started, let's look at a few of the top traders for today. I have my Easy Scanner window pulled up and I have the stocks sorted by the number of trades. This will help me find the most active stocks on the day, but you're welcome to sort these results however you'd like. You're also welcome to add your own filters. The goal here is to just find the setups you like, and you likely already have one in mind. Think of a trade that went perfectly, where you felt confident in the move and everything lined up exactly the way you wanted it to. For now, we'll just use an example of one of the top traded stocks for today. GNUS. We can see that GNUS had a recent spike on the daily chart before pulling back and eventually spiking again. We can look at a few other setups and decide which ones interest us. For example, I can see WKHS has been on a run for quite some time, and Tesla, a large cap, has been making similar moves. So our goal now is to find other stocks that look similar to these, based on the stock charts. We'll call this process reverse engineering the scan. To get started, we'll open up the Pro Scanner and start thinking about which variables we want to add. Reverse engineering the scan process is more of an art than a science. You really need to spend some time analyzing these charts to figure out what exactly made this a great trade opportunity. Let's start by looking at Tesla to see if we can find other stocks making similar moves. We'll look at the chart and think about what makes this a unique setup. So first things first, I can see that the stock gapped up on the day. We can add a criteria for that by showing price, open, days open is greater than or equal to the analytic, previous day's close, and let's say by 1% or more. All we're defining here so far is this gap you can see on the Tesla chart where the stock opened way above its previous close. So if I were to run this scan right now, I would see all stocks where the days open is greater than or equal to the previous day's close by 1% or more. This is a relatively small gap, but this is a large cap stock, so we're going to keep it like that for now. Of course, that's not the only unique thing about this Tesla chart. For example, a stock may have gapped up after following a downtrend for months, but the Tesla stock chart is pretty strong. We can see that not only did the stock gap up, it also set new highs. We can add a rule to only find stocks that are setting new highs. I'll click Add New Rule. I will set the last price, or let's say day high, is greater than or equal to the analytic, and we'll choose the 52-week high. If I were to scan this now, I would see all stocks that are gapping up and setting new 52-week highs. Let's run this to look at the results real quick. In the bottom right-hand corner, you can see the results of the scan we just created. Once again, I have these organized by the number of trades, so I can see which stocks are the most active. If you look, we can see Tesla right here because we entered parameters in our scan that are similar to that of Tesla. I can link this to my chart window and start clicking through some of these. I can see WKHS recently set a new 52-week high while breaking out. We already looked at Tesla. Now I can look at NIO. We can see that this stock too set a new 52-week high right here and gapped up. And now we have a lot of similar opportunities as the Tesla trade. I could keep clicking through these to find the ones that interest me. I can see JOB made a similar move, and I could keep scrolling through these, add them to my watch list if they fit my criteria. Reverse engineering the scan is really that simple. Of course, looking for gappers that are setting new 52-week highs is a relatively straightforward scan, and you might need to get creative on some of your other scans. Let's take a look and see if we can get creative with one of these other ideas. So here we have GNUS, which is a nice mover today. It's up 55% on the day, but this chart's a little bit different than the Tesla chart. We can see that GNUS ran from below $1 to almost $13 in the past couple of months. The stock pulled back quite a bit and then started to make a move today. This is a bit trickier to scan for, but let's start looking at some ideas. I'm going to clear my last rules so we can start building a new scan. Now, keep in mind, this scan wasn't planned in advance. I want to show you the trial and error process of building these scans versus just spelling out how they're created. So let's start looking at this chart so we can see what makes the stock unique. First, we can see that the stock is green on the day. So I'll add a new rule for the percent change. And this particular stock's up 50% on the day. But if we add 50% to our scan, we're only going to find a few stocks. Let's look for stocks that are up 5% or more on the day. Now, this scan, as is, will show us any stock that's up 5% on the day. But what we're really looking for is a stock where it ran up considerably and came back down and started making moves. So the next rule adds based on new highs. Once again, this is where the reverse engineering process becomes more of an art. We can see that GNUS is considerably below its recent highs. So let's say price data, last price, is less than or equal to the analytic. We'll choose a high of, let's say, 20 days by, in this case, we can see it came from 12 to 3, so let's say 50% or more. Now, it's good to test these scans as you build them, so let's scan real quick to see the results we find. I'll get rid of my old scan window and place this here. We can see that GNUS is listed, which is a great sign because that's the stock we're modeling the scan after. And now we can start looking at some of the opportunities listed. We can see BYFC is another similar chart. The stock ran from just a bit over $1 up to $7 before pulling back to below $2. And now today it is up over 35% on the day. We can look at some of these other setups like CEMI. And we notice a similar thing, except this time the stock pulled back and gapped down. So maybe the 5% gain wasn't enough, or we could continue to tweak these filters. Nonetheless, this is a nice move. The stock's up over 25% on the day. And if we were to look at this chart intraday, we might see a lot more trading opportunities. We can see that the stock gapped up from a close of around 325 and hit highs a little below 450 today. Plenty of room for great trades. We'll continue to go through this list and see if there's any false positives that we need to narrow out somehow. For example, we can see that this stock, while it's climbing up, it gapped down. It didn't really crawl down so much. We might want to create a filter to narrow these out. Let's look at some more. CIDM is actually a pretty good example of a stock that looks similar to GNUS. The stock ran up quite a bit and pulled back, and now it's making another nice move. We'll have to see if it continues, of course, but this is a good result. An interesting thing about this one as well is the stock volume's a bit lower than some of the other ones. So CIDM is trading 10 million shares, which isn't bad, but GNUS was trading 280 million shares. So we might want to add a volume filter to our scan. Let's go back to the false positive result that we weren't very interested in. If you recall, IAC is up 5% on the day, but the stock had recently gapped down from $325 to about $100. While you may be interested in trading the setup, it's not really the same as a stock like GNUS that creeped down slowly before going back up. We can also see that it's different from BYFC and CEMI. So what makes this GNUS chart a little bit different? One thing that comes to mind is these moving averages. So GNUS is trading above its 50-day moving average, meaning the stock hasn't broken below this red line right here. We can see the same thing with BYFC. We can see that the stock never really broke below its 50-day moving average when it came back down after this big move. So let's add that. Add new rule, price data, last price, is greater than or equal to the analytic. We'll choose a simple moving average and we'll set that to the 50-day. Let's run this scan again and see if we get rid of some of the false positives. We now found 66 results instead of the 140 results we found earlier. We can see that GNUS is still on the list because our scan was designed to find stocks like GNUS, and we can start clicking through these results. Once again, BYFC is on the list. We can see CIDM on the list. And now we have quite a few stocks that actually look like this original GNUS chart that we were looking for. Now, we can see that there's only a handful of stocks that actually have the liquidity to make for a great trade, but that's exactly what we're looking for. When you create a watch list, you're not trying to find 20 different stocks to trade on the day. You want to find the best trading opportunities so you can focus on them and make the most amount of money per trade. For our example, we created scans for finding stocks like the Tesla gap up to new 52-week highs and the GNUS scan for stocks that had recently experienced a parabolic breakout, pulled back quite a bit, and are starting to make another move. You can create scans for whatever type of setup you're looking for. The key is getting creative with the scan rules that you'll create using the Pro Scanner. I like to use moving averages, volume, price, day highs, day lows, and other types of variables to create these scans. You can also get creative and add other technical indicators such as the RSI or MACD. Basically, whatever your strategy is, the goal is to find stocks that meet those criteria. To get started, simply load up the Scanz platform and open the Pro Scanner so you can start building your rules. If you have any questions, just reach out to our team and we'll be more than happy to help.